Hello, everyone, and welcome to your on-chain update for the 30th of March. So we're going to spend a bit of time looking at exchanges today. These are obviously the centerpiece for much of the trade activity that goes on in this market. As the world's kind of going through real-world fiat bank runs, and we're in a post-FTX world, exchanges kind of become this interesting, the kind of expectation, or at least what we covered the back end of last year, was that coins were flowing out of exchanges. We're moving back towards a more spot-driven market. And given the chaos and the rally, right, we're up 75% from the lows. There's going to be an incentive at some point for people to start selling. And obviously, exchanges are going to be a centerpiece of this, where these coins are going to go. So today we're going to look a little bit into the exchange ecosystem. I'm actually going to start with on-chain activity, just to give you a bit of a snapshot of what's going on the Bitcoin side of things in terms of, does this rally have some follow through? But then we're going to move across and look at the exchange side of the equation and close out with some observations regarding the stablecoin landscape, and just some interesting things to just keep in the back of your mind as this market evolves. Anyway, let's get stuck into it. Okay, so as I mentioned, we're going to start with the on-chain activity side. And the reason why I like to do this, for any of you who have been following my work for some time, this lower high that we had here at the all-time high in November, October, I essentially got tripped up by this. I was looking at this very, very weak on-chain activity on the way up. And as we got to all-time high, I caved in and said, all right, the crowd is right. The on-chain activity doesn't matter. Something else going on. Wrong. Bad mistake. I will never make that mistake again. On-chain activity is a real thing. It matters a lot, and it matters a hell of a lot more now that we are in a post-FTX, self-custody, spot-dominated world. Given what's going on in the world right now, people are thinking about self-custodying their dollars, let alone self-custodying their Bitcoin. So an uptick in on-chain activity is a good sign. A downtick, not so good, right? And we can also look at this on a relative scale. Now, for on-chain activity metrics, by far my favorite way to measure it, as you can see, I mean, this is noisy, cool, it's a nice introduction. Momentum is the way to go. This stuff is magic. I love using it. It's so simple. You've got a yearly baseline, you've got a monthly baseline. I can see what's going on in this chart, and I'm sure so can you. Very clearly, we have broken above the yearly in the post-FTX environment. If you recall, if you were watching these videos back then, we were saying, is this an event or does it become a trend? Well, I'm looking at this here and saying this actually looks a lot more like a trend right now. And actually, it has a lot of similarities to 2019. Can't be too mad about that. So in terms of the on-chain activity for addresses, it actually looks pretty good. A key thing to remember, these top metrics we're looking at, active addresses, number of non-zero addresses, these are ticking higher. We've spoken about this before, UTXO set growth. These are non-payload. That's kind of my terminology, but these are addresses, right? You could send 2 cents to an address, and you could send, $1 in the case of ordinals, right? A huge chunk of this is going to be ordinals, by the way. Now, that doesn't mean it's a bad thing. That's still adoption. That's still usage. It's still positive. But it also doesn't give you any idea about the payload, the realized value, the coin amount, right? We're just talking about activity. It's more of a user-based metric rather than a payload, volume, settlement transfer, stuff like that. But anyway, on that kind of realm, we have upticks across all these things, right? Most of these things are pushing up to all-time highs. It's great. It's good. That's a positive sign. When we're looking at who's actually transacting, this is our relative activity. Red is whale activity. Blue is retail. It's actually pretty soft across the board, pretty evenly spaced. So there's, again, I think a lot of this activity has to do with ordinals. So just keep that in mind. It's not necessarily as monetary as if ordinals didn't exist, this would be a much more bullish observation, right? Because overall, sorry, this wouldn't, but the charts above certainly would. Number of transactions, all of these things will be indicating that we're talking about true monetary value shifting around. But that's only part of the equation. We know that ordinals are actually a large component or a growing component of what's going on. So we just have to keep that in mind. Couple more on the transaction count, both entity adjusted and not. Really nice, really strong uptrend. So overall, it's hard for me to find too much that's bearish right now, right? Overall, this is a net positive lean, and it's good to see. When we move to transfer volume, this is where things get more interesting, more useful in my mind in terms of like, I would put more weight on transfer volume than I would on activity, non-payload types. Now, this we've talked about before, this change adjusted volume. We talked about why this is created in a post FTX world, and that's because this whole bubble was fake and not real. It was a inflated FTX led bubble, and here we are recovering from that mess. So this chart on the right here is far more useful, and we are in the process. This is our transfer volume entity adjusted, breaking up towards the yearly. We're not there yet, but at the same time, right, everything that starts with an uptrend, then eventually breaks, started as just a small reversal. So overall, again, this thing is still in an uptrend. It's been going for 3 months now. So when you kind of look at all this stuff so far, we're kind of yet to find anything that's too bearish. Not a bad sign, in my view. RVT trend, I mean, this thing here, it's probably a different exercise to explain how we got this high. Basically, the amount of transfer volume was insignificant relative to the market value, or the realized value, sorry. The more important thing is that we are now trending lower. That's probably the more important observation here, as is highlighted by the blue. For RVT, trend matters more than absolute value, although a lower absolute value is better because it means more transaction volume. Nevertheless, a nice strong downtrend is what you want to see. It shows that we have growing transfer volume relative to the realized cap. So a downtrend is positive, and we do have one of those. And the last component, transaction fees. It's grinding higher, right? This is good. It's again, we're not talking about a home run yet. We're only just getting up towards neutral on the Z score on a 4-year basis. On a 2-year basis, we have actually ticked over to the positive side. So again, when we take all of this at face value, so far everything actually looks reasonably constructive. There's not much there that I can have a bad word about. So moving on to the exchange side of the equation, as I said, these are kind of the centerpieces of where this trade activity goes on. In terms of the balance and the total coins on exchange for Bitcoin, we're pretty much flat, right? We're hovering around this 11%, 11.8%. There's not really much changing. We're kind of in a bit of an equilibrium mode. That said, we're not seeing huge upticks either, right? So overall, again, it's not a negative thing. It's also not a positive thing. It's I would say more positive than negative at this point in time. This is a cool chart to really demonstrate what we just saw before. We're looking at exchange transaction dominance. So of all the transaction counts in orange, how much of it is a deposit or a withdrawal, green and red? Now, as you would expect, if we're purely in a monetary world where Bitcoin only moves value around, you would suspect that when you have an uptick in transaction activity, you actually have an uptick in deposits and withdrawals because some people are buying and selling. That's part of the monetary process. What we're seeing here is that actually this transaction activity is occurring external to exchanges. So this is ordinals. This is maybe a bit of peer-to-peer, a bit of Lightning Network. Again, overall, you like to see it. This is good, right? This is external Bitcoin economy type behavior. Even though it may not have a heavy payload, it may be kind of early and new. Again, this is a positive development to me. I like to see it. I think it's excellent. And actually, I'm not mad that exchange transactions are kind of sideways. It's showing that Bitcoin's evolving. There's more going on. And, it's a positive thing in my mind. Deposit withdrawal volumes, to be honest, a bit boring. You kind of see a bit of an uptick, but again, to be honest, I don't think there's too much to be too worried about there. Very similar to our volume on chain. You can see here we're breaking into positive momentum for our exchange volume. So even though we don't necessarily have a huge uptick in terms of exchange dominance and deposits and withdrawals, there's a lot more volume flowing in and out of exchanges. So by the way, the nice thing here we're looking at like inflows and outflows and net flow. I like to use this chart to demonstrate that there's so much more inflow plus outflow than the net flow. So there's billions flowing in every day, billions flowing out, and the net flow is like, 10,000 coins or something like that. You can see all the chop and all the color bars and okay, cool, volume is good, bad, I don't know. This is what you want to see. Transfer volume momentum is just going to tell you, it's going to distill all that information down, say, is there more value flowing in and out every day relative to the yearly baseline? This is a nice chart to just really distill down and say, do we have more momentum in the amount of transfer volume in and out? And given that flowing in and flowing out is very, very similar, you could run the same chart for just inflows, for just outflows. This one here is combined. And you get very much the same result. But anyway, breaking into positive territory. However, as you can see, we have attempted this song and dance a couple of times before. So we're not out of the woods yet, but again, it's not a negative thing, right? When I'm looking at this and seeing a positive uptrend, we can assume that it may break down to the downside, but it may not. And so far, it actually looks quite good. So here's some interesting charts. This is the withdrawal price by cohort, by year, right? Did you start accumulating on the 1st of January 2017? That means that you're going to be dark blue. 1st of 2018, that's going to be light blue. 1st of 2019, you get the picture, right? 2023 is our recent, which is coming off the bottom here. So what you can see is that the classes, right? We were pretty much everyone was underwater at the start of the year. We started the year where everybody except for what is that, 2017 and all time. So unless you started buying on the 1st of January 2017, on average, and this is looking at the average outflows from exchanges, you're underwater, right? And I know for me, my cost basis, this is actually remarkably accurate, right? I've been here since 2018. I was a bear market baby. And all of this stuff is actually, it's you know, of course, it's never going to be perfect, but it's not too far, right? If you're a dollar cost averager, it's going to get somewhere, you know, relatively close to what your acquisition price is. So the key note here is we are now up and above yellow and red, 21 and 22. The average punter is actually now back in profit. Only just, but we are now above it. So now what that also means, this is probably the more interesting chart for the day. That also means that my expectation, and we've talked about this before, 25K was my gut feel for where like we're probably going to get into that no longer deep value stage. And I think that remains true. Now that we're up here at 29K, this is to me the floor that was 6K back in 2018. We're coming up against that middle territory. This is where most people have a cost basis of some size around 30K, 29K. We spent quite a bit of time around here before Luna imploded. After that first sell-off back in May, we spent a lot of time up here at this $30,000 level. It's psychologically important. So it makes sense that we're now above that level. So my expectation is above here, right? We've only got the 2022 people who are sitting above us. So people who bought literally at the exact wrong time are the only ones who are above us. Just be careful that above here starts to get into what I would call caution territory. Territory that as bullish as I am and as much as I think corn's going to go to $1 million, I'm not in the Balaji camp where it's going to happen in 90 days or whatever it is, 85 days or whatever. My gut feel is that as we get above 30K, the probability is really going to start to build that people will start taking some off the table, traders will step in, something will happen with news. The probability that we launch from here is high. The probability we come back here is equally high. So I'm not personally in any rush to be diving into anything above 30K, even though I believe over the long run, that's where we're going to head. Personally, that we're getting to that territory where we're going to start mobilizing a couple of sellers, 2019 style, right? At some point, this thing's probably going to find a local top that's below the all-time high, and then we will have to digest that move. So just note that we're getting up above the point where even people who were just not that really good at trading this market, they're kind of now back into the money. So just be careful about that one. If we look at it on a per exchange basis, we can see that we've found support. So again, this kind of 21,000 level really provided that sound support. I think that 20,000 level is now very, very sound. There's probably a lot of support down there. So therefore, you know, 20,000, 25, that's kind of the top of the deep value zone. Above that, we're now into the neutral territory. There's less momentum kind of keeping us from coming back down here, in my view. One last one, just by the way. This is our whale only withdrawals. And we're talking about people whales who started withdrawing on the very, very tippity bottom of March 2020. We are currently at their cost basis. So even those whales, right, on average, obviously everyone's different, but in aggregate, the whale cohort, we are at the cost basis of the whales who started buying from March 2020 onwards. So again, above this zone, huge portions of the market are going to return to a profit. So it's just something to be aware of. Keep in mind, I think we'll get a bit of a regime shift as we tick higher. Again, we read this as it happens, but this is just my kind of gut feel as we sit before this playing out. There's likely to be a psychological shift that comes in coming weeks. Now, just to kind of give a bit of color to that last topic there on whales and just kind of accumulation and exchanges, here we are looking at our trend accumulation score, broken down by wallet cohorts. On the bottom here is shrimp. On the top are mega whales, right? So scaling from 1 to 10 to 100 to 1,000, 10,000, so on and so forth. Note that as we had our $20,000, 19.8, whatever this was, This dip created a psychological shift, which you can see across all cohorts. People started rebuying. So just bear in mind, that means that there's a bunch of cost bases starting to develop. When people start buying in cost bases, it's good because it's buy side, but it also means cost basis starts to creep and climb and move higher. So again, we're starting to get to that stage where we're not necessarily overheated. There's nothing saying that it's kind of warning signals, but the higher that this goes and the more that this happens, the more that this kind of thing will build. So it's just one of those things we're going to track it over time. I quite like this chart, the accumulation trend score. You can see we've got that kind of base formation we had here. The sell-off is a major accumulation period, right? People see discount value. FTX and Three Arrows Capital were both such events. We've kind of had our bottom formation phase, which I think actually takes us, this thing here has a lot of similarities to our this, by the way, was 3,000 to 4,000, right? In a percentage term, that's pretty significant, even though it looks sideways. Here, we're talking about a not too dissimilar type range, right? 15,000 up to 20,000. It's kind of a similar type ballpark, right? We're not talking about something that's too different in terms of relative scale, even though the numbers are much bigger. And you can see that we had huge accumulation through the 2019 peak, and we're starting to get that showing up again. Could we have a repeat? I mean, bull markets are marked by this, but bull markets create bear markets. So I wouldn't be surprised if we get a psychological shift, and if some news comes out and we end up, maybe we get to 30, 40, 45, I don't know. And then we end up coming back down here to 30, or maybe even down to 25, just to test and really test the resolve. Bitcoin's a volatile beast. The world's a volatile place. Something like this would not surprise me. Now, the last thing I want to touch on is stablecoins. This is more just a keep your eye out there, because stablecoins are an important part of this industry. There's a lot of news about Binance. We've already seen BUSD's been, taken out the back and shot. We've seen USDC is having some troubles. There's outflows. Stablecoins are a capital what would you call it? It's a source of capital in this market, and we are seeing net outflows. So stable coins on exchanges, you can, just visually, you can see FTX, big outflows, but note that this is a structural decline. Coins are flowing out of exchanges, stable coins are. So that's okay, that's insight number one. But this is pretty much the largest outflow, with the exception of the event that was FTX. This is now a sustained outflow, right? When we look at balance of Bitcoin and Ethereum on exchanges in percent terms, and then this green line here is the dollar value of stablecoins on exchanges. Bang. A lot of this is BUSD. A lot of this is USDC. There are coins flowing out of exchanges right now, stablecoins. And in terms of total supply, here's BUSD, which is just going into redemption only mode. So that is net capital flowing out of the crypto ecosystem. Here is USDC. It has fallen from 43.8 billion to 33.8. So we've lost, what is that, about 9 billion. Some of it's going into Tether, right? So Tether is gaining market share. Net outflows, however, this is the 30-day change. We are seeing stablecoin value flowing out at a non-trivial clip of $4.8 to $3.3 billion a month. This is just one to watch. There is going to be two takes here. One, this is just pure net capital outflow from this industry. To me, it signifies a bit of concern, bit of panic, bit of fear. I think that's probably, of all the things we've looked at, which is actually quite constructive. This, I think, remains a little bit bearish in my personal view. The other argument here is that people are in fact saying, well, stuff your stablecoin, I'd rather hold BTC and even ETH, right? People would rather move towards the trustless assets. That's more bullish. I don't quite have a good gauge on this, but what I do see is that there are regulatory shotguns that have been pulled out, and they are pointed directly at this industry. So it's just one to keep your eye on, one to just be aware of. We'll kind of keep tracking and watching this. In terms of the Bitcoin network itself, it looks really good, actually. I'm quite impressed. That doesn't mean there aren't regulatory shockwaves and landmines out there that are going to keep us on our toes. So expect some volatility. Certainly, just in terms of like keeping yourself calm. I know I went through 2019. I'll never forget 2019 because I had my whole spreadsheet where I was going to buy as much as possible at the bottom, and I didn't. I feel like at the very least, personally, I've evolved from that point now when we're getting much better at finding bottoms these days. So I had a bit more conviction back down there at the lows. Do I have as much conviction in 29,000 going higher than I did at 15,000? No, I don't. 15,000 very much looked like a bottom. 16 would look like a bottom. Even 20, even 25 looked like a bottom. 28, 29, 30. Not that it's not good value, but I can see us coming back down here. So I'm not rushing out of my boots to go and, I missed the bottom. I'm acquiring as much as I can. It's a nice way to just kind of calm yourself and say markets like to go up and down. And it is likely that we will probably get some kind of momentum. And again, maybe the world falls over and this thing just goes straight up or goes straight down. We just don't know. But this is just kind of my lessons learned. 2019, I'll never forget the feeling of not having enough. And I don't feel that at the moment. I think that's because probably just experience and getting used to these things. But this market structure has a lot of similarities to that 2019 period. And we're getting to, I mean, mind's eye, 8K ish. And we peaked at 14K and then had a 1 year bear market that went down to 3.8. So I'm not saying that's what's going to happen, but I'm also not planning on this thing going to all-time high in 90 days. So that's just kind of my gut feel and instinct. But hey, who knows what the world's going to do. So anyway, hopefully that kind of helps you just ground yourself and understand. If you've got any questions or queries, or there's particular topics you want me to cover, to just, what I find on-chain analytics is really good for is keeping yourself grounded during the most chaotic downside and the most euphoric upside. It's a nice way to just keep yourself centered right in the middle. So if you do have questions or queries, feel free to shoot me in the comments and we'll touch on them in coming videos. Until then, see you then. Cheers.